Hi, I'm Linda Fox. I'm Senior Reporter at PhocusWire. I'm in the PhocusWire studio at Phocuswright Europe. I'm delighted to welcome Jaime Sastre, CEO of Juniper Group, and Rita, who is a partner at MCF. Welcome, guys. Thanks for joining us.
Thank you.
Thanks for having us.
I want to start with Juniper, just because you've had quite a few acquisitions through various arms of the company. So you've got Constellation in the overriding, I think, and then you've got, Vela Software in there somewhere, and you've got Juniper, and you've acquired Vervatech, and you've acquired Peakwork, and you've invested in Roibus. So that's quite a lot of activity over a space of time. So just tell me about the kind of overriding strategy of those acquisitions.
Yeah, okay. So thanks for the question. I am actually the founder of Juniper back in 2003. What happened is I ran the company for 10 years, and in 2014 I sold to Constellation Software under the operating group of Vela. Constellation Software has 6 operating groups. One of them is Vela, and that's the operating group that acquired Juniper at the time. And then I continued running the company for 5 more years, when I then promoted a CEO to run Juniper and started doing acquisitions for Juniper Group, then called, which is under Vela, and then Constellation. From here, what we did is continue acquiring companies to today, which we have 24 companies under the Juniper Group. Juniper Group is one of the 7 portfolios within Vela. Now, so Peakwork, Vervatech, all these companies are part of our goal of growth and development, where we are going to acquire strategic assets that are potential synergies with other companies we have. But we do acquisitions not for just doing synergies with our companies, but because we are capital allocators. We have a philosophy of buy and hold forever. We never sell a company, so we're not looking for an exit of those companies. And we really, when we do the valuation to acquire them, we never think how much they're going to be worth in 5 or 10 years, because that's not important to us. We are publicly traded in the Toronto Stock Exchange. So what we do is provide value to our customers and get those dividends passed on to our shareholders. And then basically what we do is reinvest all the capital we generate. Roibus, in another way, it was a strategic thing that we did as part of the strategic goals at CSI, Constellation Software. What we don't want is that some of the entrepreneurs that we may have inside our companies go out and establish new companies. So we created a venture capital arm where if someone within Constellation wants to do a startup, start a new venture, then they can pitch it to us, the portfolio managers, and then it passes, and if we like it, then what we do is we invest it. So they have shares, and we become the VC of choice. It's a bit different than the standard VC investment, but it's quite useful because you actually can access the resources and the knowledge that's within Constellation, which is basically one of the largest assets that we have.
What's just as you bring all those components together, what's the thinking behind having Constellation and Juniper and all of these portfolios and the various different arms within? I mean, why not just become Constellation?
Yeah, so we believe that software companies, we only invest in software companies, are much better handled by independent CEOs that are not integrated into a large organization. So think of it as Constellation Software is an addition of around 1,000 companies today. Each of them is operated independently. At CSI headquarters, we have around 20 people. And those 20 people are lawyers and financial people who are actually reporting into the Securities and Exchange Commission and to the shareholders to communicate how much capital we deployed, how much revenue we've got, how much EBITDA are we getting, so how our companies are performing. And think of it as capital allocators, where we get above average returns in the market, and where we benefit from each other of sharing knowledge. If we run 1,000 software companies, you can imagine that we have a lot of things to share and can benefit other companies. And we think of it as assets that we get a return of investment. And since we are good at doing that, we don't see the need of actually selling any of those. We would be the ultimate buyer, if you will, even though they might be small companies, right? But what we think is if we continue doing that and getting above average returns, the stock price will take care of itself as we grow.
Good to know. So, Rita, we've seen Juniper Constellation buy up a load of companies. We've seen similarly Travelsoft quite active recently, and you advised on the big investment into Visitor Group. And in many ways, these are companies that were sort of, slightly under the radar, and they're now coming onto the radar because there is this technology roll-up. Can you talk to us a bit about the drivers behind the technology roll-up?
Yeah, I mean, obviously I have Jaime here. we may have different views, but I think, there are many different types of consolidators, so as to speak, right? On the one hand, you have consolidators that are looking at more focused on top line and bottom line, maybe less focused on integration. On the other hand, you have ones that are quite focused on synergies, cross-selling to the existing customer base, expanding, the product set that they can sell to, while they're growing their customer base. So drivers will be different, for each of these. I mean, what I can say is, for example, Visit Group, the deal that, we just advised on earlier this year, is very much focused on building, broadening their product set, to be a, market leader in the Nordics across hospitality. We worked with them on a couple of the acquisitions already. We're on the sell side. On the other hand, you also have, I don't know if you call them consolidators, but, companies that are buying quite a lot of other companies, such as Guesty in the vacation
it's consolidation space. At the end of the day, isn't it?
Exactly. And you have, Muse, they have done quite a few acquisitions, and you have OTA Insight, which is now called Lighthouse. They've done 7 acquisitions as well. There are quite a lot of different
There
types.
are some roll-ups going on. I think it's super interesting. Why is now the right time? And feel free to both comment here.
I mean, from my perspective, at least, I'm seeing that the gap between the buy side and the sell, in terms of valuation, the gap between the buy side and the sell side is narrowing this year.
Right.
So we expect a bit more, M&A happening.
Yeah.
Last year, it was tough. I mean, in 2022, 2021, the sellers, it's a different market.
Yeah.
And, as a buyer, you've got to buy at the right price, right? And I'll let Jaime comment as well.
So I think it's just the trend right now, because probably more of these companies are becoming a bit more mature. For us, it's not either the wrong or right time. I think it's always the right time. We've been doing acquisitions since 1996, and we do as many as we can, as long as we can buy companies that we like. So we analyze a bunch of companies, and some of them we simply don't like them. We don't integrate them. We don't fire their managers and put new managers. So we'll have to like the company, the customers, and the people who run the company, because we're going to keep them, we're going to coach them, or
going to work with them,
and we're going to work with them. So we have to like them for the rest of our lives. So we will do this today, next year, and 10 years from now. It's not because of consolidation. It's just, I think we're looking at the smart investment for forever. I understand that today, those companies that are starting in travel tech, maybe 10 years ago, it's become now maybe a mature moment for them to sell, and it looks like it's the right time. But I think it will be always the right time to look into acquire companies. There are certain people, entrepreneurs, who want to create something of value, and then there are acquisitors that think that they can make a good return of investment by buying those companies. Some others, of course, they want to do consolidation, make like a big, maybe consolidate the company to then sell it to the next private equity, or even maybe take it public.
Okay, so you're a generally acquisitive company. But what you were saying there was that valuations are now more realistic. But would you also say that there's pressure on some of these smaller companies post-COVID to survive, essentially? Is that fair?
Yeah, maybe I'll start on that one. I think you're right in that there has been quite a lot of capital being pumped into the ecosystem, right, over the last, during COVID, but also just more generally over the last few years. And I think, capital is not as easy. Getting capital is not as easy.
Yeah.
And I think that has an impact on the valuation expected, on the seller side. And that, in my opinion, I think that's one of the drivers for, more M&A happening. And also in the investor community, that's a saying that DPI is the new IRR. Investors are getting pressure, right, from their own investors saying, can we see some capital back?
Some return.
I'm not expecting 10x or 5x even as a VC, but can we just get something back today?
Yeah.
In order for especially if funds are raising new funds, that seems to be a key criteria these days.
Yeah. So. I mean, is travel seems to be less attractive to investors. And I think, we can say that that's probably kind of COVID related. It went to zero. What does the industry do to sort of make it, attractive to bring the money back in?
So in terms of COVID, I thought we would see many companies going bankrupt in tech, and it didn't happen.
No.
They all survived. So
they had runway. I mean, because of the capital that had come in, there was runway.
But even the smaller companies that were not so much invested were more, bootstrapped.
They were lean, yeah.
They fired some people, and then they actually survived, and they're here now. And we have a bunch of them who now we're actually looking into buying. So we're buying not companies that are going to go bankrupt, but companies that maybe are a little bit stuck in their development, in their growth.
Okay.
And they say, well, if I join another group, that gives me possibilities to, perhaps take some chips off the table. I'm going to tell you that, going through COVID is not easy. And some people say, you know what, I don't want to be by myself if the next wave of COVID happens, and then maybe I won't be able to survive the second wave. So if I'm with a group, they'll help take care of me. What happens to us is that during COVID, we saw it coming, but we had, Daddy CSI with deep pockets, which was that, look, we're going to survive it. It's not a problem. We just need to make the best out of it. And some actually of the companies invested into doing developments for when when we would come out of COVID. So COVID necessarily has changed things for sure, our mentality, but that has not put those companies in need of immediate selling or anything. I thought we would during at the end of COVID, we would say, oh, we can buy this, we can buy that. The truth is, it's much more complicated to model a company on what's going to happen in the future and buy them. So the valuations, I wouldn't say that we're low. I would say that we're very uncertain. The winner case compared to the wipeout case was very different, right? And then, because you could see that they had a big decrease, of course, but how are they going to recover? We finalized channel managers whom the hotels, when they leave and choose another channel manager, it's not that easy to get it back, right? We finalized other companies that are actually booking systems like Juniper it is for some of their customers. Their revenue's gone down because the revenues of their clients are down. But if those clients come back up, their revenues are going to come back up too, because those clients haven't left. The only thing is that they're not producing revenue because of the low sales. So, and the other part is that interest rates, because of the inflation, interest rate went up. And so the market now is more, let's say, realistic on valuations because they can go and invest and it's more difficult. Remember, a lot of the private equities, we don't do that normally, but a lot of private equities are getting debt to actually acquire. They put 50% of debt.
And it's expensive right now.
And it's expensive.
Yeah,
so
it's expensive.
The returns are more complicated.
Yeah.
I think I agree with you on the resetting of expectation because of COVID. Especially if you're a founder, that's everything, you might be working on that for 10 years and, people want to take some chips off the table, understandably. But to your point, on, investors thinking or being less favorable towards travel, I don't quite disagree with that in the sense that I think, if it's consumer facing, it's a bit tougher, there's no question. Right. Within B2B, there are still pockets of activity. So, vacation rental software.
It is still,
hugely active, and we're seeing a lot of significant deals
deals
being done.
Yeah.
We're seeing corporate travel. Actually, there are still quite a lot of deals being done. People actively looking at M&A. So I think there are still pockets of activity, but maybe not just that the whole market is buoyant.
Well, where would your individual bets be? Would it be short-term rental? Would it be channel management or some of those, roll-ups around hospitality? Where would your bets be?
Personally,
I more like M&A activity generally.
Yeah, I like the vacation rental space for sure. I worked with a business called Logify around the corner from where we are. Yeah. So spent a bunch of time in that space, and we're seeing market leaders emerging in different segments within short-term vacation rental. Everyone's wanting to expand their product set. Yeah. It may look to be crowded from the outside, but because market leaders are emerging in, the long tail, in, the medium-sized players, and also players that are, someone like a Guesty focusing on the larger segments. There are different players coming, emerging.
And there is talk of, a creation of a marketplace in short-term rental as well, bringing in all of those individual elements that would help an owner, a property manager, even a guest, and rolling it together. So that's quite an interesting trend as well, I think.
Yeah.
So
I would almost agree with that. I think it is a good market. And the second one probably is tours and activities.
Yeah.
It's a very fragmented market, and everyone is trying to do a consolidation of that, but you can only do it in so many places, and the world is super big. So, creating layers of connectivity between all of those, I think it's going to help a lot to the OTAs that want to sell tours and activities, or whomever, or maybe even through AI, right? On when you're in a place and you want to know what can I do when I'm here, and book it, maybe through that.
The in-trip type experience.
Yes.
Yeah, interesting. Okay, as we finish up here, apart from, having a really low price, how should a company that wants to be acquired, what should they be thinking about? Give me 2 or 3 things that they should be thinking about.
So I wouldn't say low price.
No.
I say I think it's fair valuation is good, because at least for us, we will work with those owners hopefully after acquisition, and I don't want them to feel that we kind of cheated on them, right? And so I think a fair price is good, and realistic expectations. But now I think what they have to defend there is the value that they provide, the culture of the company. At the end of the day, the IP that they have created is what you really buy, and the customer relationships. But this can be destroyed really fast if you don't have a really good team, human team that is able to do new sales, support those people, and all of that. So we believe a lot into people who are open-minded to new things, and then want to be coachable by peers on the industry.
Similarly, Rita, as you advise companies on who to buy, what to buy, what are you looking for from the companies that they're acquiring?
Yeah, I think, depending on size, but I think fundamentally it needs to be a business. Well, it needs to be a team that you can work with at the end of the day. The team makes a big difference. I think, thinking through how the combined business will look like in 3 years, in 5 years' time, that may help bridge any gap, between the valuation expectations, on the 2 sides, and also really think through what does the target bring, to the buyer on a more strategic level as well, rather than just the immediate, revenue and EBITDA.
And generally post-COVID, is scale even more important in travel, would you say?
No, I don't think scale is like, no. If you do, the other day I was at a conference that people were discussing, are we going to have, like, for the hospitality industry, some sort of Google that solves all the problems of the hospitality industry?
No.
I don't think so. We're seeing more and more startups that are focusing into one problem, and if you're focusing only on one problem, scale is going to be very difficult. If you're focusing on the pricing of the hotel, the scale is going to be much more difficult. And if you're doing PMS, it's a bit more. And then, so I think scale is not really. It's like making well. You're doing well what you are.
Doing well.
Yeah, exactly.
Yeah.
And try to do it more, of course. But it's going to be very difficult. Software companies normally are going to be, by at least in vertical markets, which we are in a vertical market, where this is not a horizontal market, are going to be good at a certain size.
Yeah. Do you agree?
Yeah, agree with that. I mean, we're seeing companies that, could be doing less than 10 million revenue, software revenue, but 50% plus EBITDA margin. You can be very profitable and niche as well. Yeah. And then the question is, how long does it take to get to, call it 100 million? Or do you have to be? That's the question.
Maybe you're happy just targeting that market and,
exactly,
making your money. Rita, Jaime, thank you for joining us.
Thank you.